Happy Monday, Antelope Valley. I hope everyone's well and that you had a pleasant weekend. It is August 17th, 2026, and I'm Mark Troth, broker and co-owner of Berkshire Hathaway Home Services, Troth Realtors right here in Lancaster, California, bring you this week's version of the Antelope Valley Real Estate Market Update, where week in and week out, we take a look at exactly what's going on with our local real estate market. As I like to point out every week, our statistics get lumped in often with greater Los Angeles County, Southern California, and our market is definitely unique, behaves unique all unto itself. So feel it's important that residents, potential buyers, potential sellers have a trusted local resource to follow along with to see what's going on in our real estate market. Also like to point out before we get into the statistics that our statistics are courtesy of the Greater Antelope Valley Association of Realtors MLS system. So where are we as we crest the halfway point of August 2026? Active listings up a tick, up 8 over last week as we start this week at 1,092, up from 1,084 last week, so a less than a 1% increase. Pendings, little bit of a bump up. They bumped up 10, but you know what? We will take the win. Up from 396, we crested that 400 level back to 406, 2.5% increase. So where are we? Week over week comparison, looking at the last week, August 10th through yesterday, the 16th from the week prior. Median listings that, new listings that came on the market. The week prior, they were at 90. We're at 82 last week. So that is a drop of 8.9%. Median list price up 6.5% from 429.5 to 457.5. New properties into escrow. As I mentioned, a little bit sluggish over the last few weeks, even though we had a little bit of a bump week over week. Last week was 53, up from 62 the week prior. Median days on market that those listings were on the market was down 11 to 37 days. Listings sold during the week of August 10th through the 16th, 43. That was down from 52, 17.3% decrease. And our median sales price of those 43 listings, 465, down 7.9% from 505 the week prior. Couple of important statistics we've been following along with, what is known as absorption rate. That would be if you were to take those 1,092 listings and divide by the divide the number of closings over the last 30 days, which was 282. It would take 3.9 months for all of those listings to go away. Absorption rate, if anytime you're 3 months or less, you're trending more towards a seller's market. The closer to obviously 2 months, 1 month, the more pressure of a seller's market. Anytime you're between 3 to 6 months, you're in somewhat of a balanced market where buyers and sellers have to have a little bit of give and take. And anytime you're 5 months, 6 months or more, you're definitely into a buyer's market. Our market has been trending with an increase in the absorption rate over the last few weeks. Been, somewhat quiet as far as activity, especially in the 600,000 and up price range. That absorption rate last week was 4.5. This week's it's 5.1. There was 271 active listings, 600,000 above currently on the market in our MLS. And during the last 30 days, only 53 of them closed escrow. Like I said, last week that was 4.5. So we're definitely seeing still some slowness, if you will, in that 600,000 plus price range. A couple of other statistics before we wrap up we've been following, and that's the percentage of that 1,092, the percentage of active listings that are bank owned, what is known as REOs, short real estate owned. And currently 21 bank-owned short pay properties on the market. Those could be FHA, Fannie Mae, Freddie Mac, any number of different lenders. 1.9% up from 1.8 the week following. Basically 21 current properties on the market, active listed active listings listed as bank-owned properties. And then short sales, those where the sellers are trying to sell them for less than what they currently own, take lender bank approval to do that. And out of the 1,092 active listings, currently 28 of those are listed as short pays. So that was 2.6%, up from 2.4 the week prior. So both of those numbers have been creeping up. I don't see a big reason for concern at this point in time, but we're going to continue. Hopefully we don't see those, crest 5% and start moving towards 10%. Then we'll definitely start kind of scratching our heads saying, where's the market heading? But right now, that seems to be a reasonable percentage of active listings that are either bank-owned or short pays. Any kind of distress can cause either one of those, death, divorce, unexpected job loss, job transfer. So that's, kind of typical for any market. So really nothing to be overly concerned about. So, well, that's this week's look at the Antelope Valley real estate market. And as always, if there's any other information, any other statistics that you would care to have, by all means, please do not hesitate to reach out to myself or any of our other trusted associates here at Berkshire Hathaway HomeServices Troth Realtors, where we have proudly been serving the Antelope Valley real estate market since 1957. All right, everybody, take care. Make it a great week, and we'll chat with you next Monday. All righty, bye-bye.